Yeah, it's another quick episode here of this video channel that I have. I can talk to you about Bitcoin, entropy, random walks, and trending moves. I don't know if you can hear it, but the wind is quite strong here today. Anyway, what exactly am I talking about with Bitcoin, entropy, random walks, and trending moves? Real quick. Bitcoin, like every other asset, can be measured in many different ways, right? Obviously, we look at returns on investments as the primary information, right? We measure that based on volatility and the direction of the asset, which is volatility and correlation gives you, correlation of past price action gives you the tendency of the probable direction of the asset. That leads to the returns, which then followed by the price action. So you can measure it that way. And then, of course, there's entropy, right? Which shows you a measurable, right, quantifiable value for the randomness and, to some people, it's uncertainty in the market. Now, I say to some people because if you are in alpha trading, you know we have entropy indicators that show you when the asset is in fact in a random walk or in a trending move. And if you know anything about alpha trading's indicators, not only are they accurate, but they're extremely useful. And that is extremely useful information, the entropy indicators that we have, because it is, just like volatility, it is leading primary information, right? It is a leading primary indicator, leading information primary indicator. If you use volatility and entropy and returns oscillator and coefficient of variance, for example, those are four primary indicators that you can use to look for confluence, right? When you have confluence in three or more indicators and primary indicators, it usually is telling you to take that trade, right, or to make that trade, right? And how do we use entropy? Well, we use entropy to see whether or not the asset is in a random walk or in a trending move, because again, those are the two states that an asset can be. Now, can you trade a random walk on entropy? Well, the answer is absolutely yes. As long as you have entropy in a random walk, you can still trade it if you know the correlation and the direction, right? The probable direction, which you can do just like you can with volatility and correlation. And that is something that we discovered at Alpha Trading. So we built that into a single entropy indicator where you can tell the entropy and the correlation either to the alpha squared entropy power percentile or the Shannon entropy percentile. Either one works great. What else can you do with entropy? Well, that's really what you need to know, what you need to do with entropy as a trader, right? And you use it in confluence with the other indicators, as I said. So if volatility, right, like the AVR indicator is telling you, right, if 2 out of the 3 lengths, for example, if you have 3 lengths of volatility showing on your AVR, and 2 out of the 3 are saying go in this direction and entropy agrees, and the returns oscillator or the variance or both agree, then that's the direction you go with, right? Now, should you try to trade a random walk if you're not getting confluence from the other indicators? Generally speaking, no, you shouldn't try to trade an asset if you're not getting confluence on 3 or more of the primary indicators. Because, right, not just volatility, but randomness, right? There's high degrees of uncertainty at times, relative uncertainty, even if you have the best calculators on the market, which are the alpha trading tools, in my opinion. Obviously, I'm biased because part of the co-founders there, one of the co-founders. But even if you have the best calculators available to retail traders, there's still randomness, and you still have to account for that. And one of the ways to do that is to look at lower time frames and see what is happening in order to establish the probable outcome of the higher time frame that you're trading on. Anyway, entropy is a very powerful indicator, as I said, and yes, you can get it if you are a pro trader subscriber at Alpha Trading, which is really dirt cheap. And there's no longer a holiday sale right now, but it's still ridiculously cheap. You know, less than $200 a month gets you more than 40 indicators. I think it's like $130 a month or something like that. Gets you like 40 plus indicators, right? And they're all based on leading information. They're all based on returns and means, all the ones that we recommend using anyway. We do have a couple for traditional TA traders that have been built based on traditional TA maths initially, but then we wrap them up in standard deviations so that they are more suitable for trading volatility. Anyway, I'll talk with you guys later. Remember, entropy and volatility for the win. See ya.